particularly driven by obviously the kind of focus around AI. And it wasn't too long ago that data security and data management were only the topics discussed with a CTO, maybe a CIO. And now those conversations are happening in every boardroom across the country and literally across the world.
And do you expect that demand to keep growing? I mean, people are saying we're only in the beginning of the AI revolution. Others are sort of feeling like it's getting tired. What would you say to those folks?
Well, I think we're still in the early stages. I think even when we think about AI adoption and what we're seeing in terms of contribution, I think we're seeing a lot of experimentation still at this point. And the real value, I don't think we've seen really customers and really companies around the world take advantage of yet. A lot of experimentation. But again, I think the true value is still yet to be realized. And I think that bodes well for us because, again, focusing on data management and data governance is a key to having your AI solutions that you're trying to adopt really prove valuable.
Another week means that Nvidia has reached a new all-time high. After hitting a fresh high on Wednesday, the stock surged to record-breaking heights once more on Thursday. The stock has frequently reached new highs in the last few years due to the widespread use of artificial intelligence, AI. Nvidia is up 200% in 2024 alone and looks ready to soar even higher. Some investors are naturally cautious following such a large surge, worried about the possibility of a slowdown in the adoption of AI and Nvidia's exorbitant valuation. Let's examine the condition of AI generally, Nvidia's position in the big picture, and Wall Street's assessment of the company's prospects. The cloud infrastructure providers, who are the largest distributors of AI to the general public, are the only place for investors to learn about the adoption status of generative AI. In the final week of October, the three major cloud providers, Amazon, Microsoft, and Alphabet, all released their calendar third-quarter numbers. Each company's executives pledged to keep investing extensively in AI, with the majority of those capital expenditures going toward the servers and data centers required to advance their AI initiatives. In addition to continuing to scale up spending to assist its AI development, Meta Platforms has leveraged its vast customer database to power its Llama AI model. Investors can also look at the outcomes of other well-known AI technology startups. Palantir Technologies' third-quarter results, which exceeded all forecasts last week, were fueled by unrelenting AI demand, according to CEO Alex Karp. Earnings per share, EPS, increased 100% as a result of a 30% annual increase in revenue. Demand for its artificial intelligence platform, AIP, the main offering of its commercial AI division, drove the outcomes. A 77% increase in the number of customers drove a 54% increase in U.S. commercial income. Consequently, the remaining deal value of the section increased by 73%. The top manufacturer of premium chips for artificial intelligence is Taiwan Semiconductor Manufacturing, a chip foundry. The business also released results, which further supports the mounting body of evidence showing that there is a strong need for AI. While EPS increased 54% year-over-year, revenue increased 39%. Strong AI-related demand was noted by the corporation as the driving force behind the outcomes. When combined with the significant capital expenditures made by big tech and the outcomes of Taiwan Semiconductor and Palantir, it is clear that there is still a high need for AI. Without a doubt, artificial intelligence, AI, as we know it today, probably wouldn't exist if it weren't for Nvidia's graphics processing units, GPUs. By dividing enormous volumes of data into smaller, easier-to-manage pieces, the business invented parallel processing, which allows for the execution of a vast number of mathematical computations. Nvidia gained an advantage from this technology that it has never given up. Although GPUs were initially created to enhance the realism of pictures in video games, parallel processing has shown to be just as effective at handling computationally demanding tasks like artificial intelligence. Because of this, Nvidia has emerged as the industry leader in data centers and the cloud, where a large portion of AI processing occurs. Tech Insights, a semiconductor analysis organization, reports that Nvidia held a commanding 98% of the data center GPU market in 2022 and 2023. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Be constructive for our viewers is take stock of the things that really worked this week. Nvidia, let's just start there. 8.5% gain this week. It finally topped Apple in terms of its market cap. Joins the Dow today. It's a new record high today. There's the market cap race between these two companies, 3.6T versus 3.4T. In terms of Nvidia, you own the stock. So how are we thinking about something that obviously worked really well today? We'll start here with Nvidia.
I think that the playbook was set up, that if you listen to Google, Microsoft, Amazon, Meta, they talked about spend, and we all know Nvidia is getting a chunk of that spend. And so their earnings come out, I think it's November 20th, actually.
Yeah, it is the 20th.
Right? And so they're going to crush it again, and I think Jensen delivers the goods. And so I think after we've had these earnings come out with the hyperscalers who are just printing cash and then spending that cash, we know it's going to go to Nvidia. And so I think this trade is going to last at least another few quarters in terms of people moving to Nvidia. And you have the opportunity, right? The stock was between 100 and 130 for a couple months and basing out. And so now it's breaking out of that. I think it's going to break out going into the earnings.
That's basically how Jefferies, Brian, is thinking about it. They look at this stock along with Marvell and then Broadcom as having the most upside because of that. Exactly what Bryn said. The hyperscalers are accelerating their spend. They're telling you they're going to spend more. They're telegraphing what's coming. And to Bryn's point, well, where does the majority of that money go? Probably Nvidia, with some others.
Well, I think Kevin said it best. We're going to buy the news. I think Jensen is going to deliver the goods. We're going to buy the fundamentals ahead of that. What's really interesting about the semiconductor space as an industry, we've been talking, a long time about stock picking, right? And the dispersion side of things has been increasing, dispersion of performance, fundamental performance, technical performance, valuation. So that really speaks to honing in on the issues that you want to be in. And NVIDIA clearly is the leader there.
Broadcom, you own Broadcom too.
Broadcom as well. And so then you've got to think about, okay, so when is AMD going to get going? If you want to start thinking about stock picking and kind of getting in early, that's why we're kind of looking more and more at AMD, because maybe the next big performance push in 2025 can come from a stock like that.
Yeah, stock has had a decent week, right, with everything else. A rising tide is ultimately going to lift many, if not all, boats. AMD's up about 5% on the week. Kevin, you own Nvidia and Broadcom.
Nvidia for me is the best of times, worst of times story because it got entered into the Dow Jones Industrial Average today, which is a benchmark against our flagship dividend portfolio, and yet we're handcuffed from owning it because the dividend's like a rounding error. On the other side, in our growth strategy, we own it, and it's crushing it, and we're really excited about that. But it's going to make my job tough for benchmarking against the Dow.
Yeah, well, maybe there'll be a dividend story to talk about with this company in the future.
From your mouth to God's.
Right? I mean, I don't know. They're going to have so much cash falling all over the place that maybe they'll need to return some more to shareholders.
It's improbable that the company has given up a significant portion of its share this year, considering its unrelenting rate of innovation. The company's financial performance has been driven by this dominance. Nvidia recorded record sales of $30 billion during the second quarter of fiscal 2025, a 122% year-over-year increase. Record data center revenue, which increased 154% to $26.3 billion, was the main driver of the performance. Additionally, earnings soared, leading to a 168% increase in diluted earnings per share to $0.67. The news raised concerns among investors due to two factors. The first problem was that the gross margin decreased from 78.4% in Q1 to 75.1%. Investors should not be overly alarmed because the latter figure was an all-time high. The management attributed the problem to inventory and product mix planning for the impending launch of its Blackwell AI processors. The second problem was the company's 79% sales growth prediction, which was a glaring slowdown from the triple-digit growth that Nvidia had been delivering for the previous 5 quarters. As is the case here, seasoned investors would understand that the company will eventually be caught up by aggressive competitors. 79% increase is still admirable, though. When Wall Street analysts agree, it's significant because they rarely agree on anything. Nvidia, which continues to hold a buy recommendation, is one example of this. Bullish emotion is almost universal. None of the 64 analysts that released an opinion in October suggested selling, while 92% of them gave the stock a buy or strong buy rating. That kind of near-unanimous accord on Wall Street is remarkable given the wide range of perspectives. But maybe it isn't that shocking after all, considering Nvidia's continuous string of outstanding financial achievements. Hans Mosman, an analyst for Rosenblatt, claims to be the biggest Nvidia bull on Wall Street. Despite Nvidia's record-breaking run, he still has a buy rating and a street-high price objective of $200, which is 37% higher than the closing price on Wednesday. Nvidia's declining gross margins worried some investors, but Mosman isn't discouraged. According to him, the problem stems from the company's rapid pace of product creation, calling it a high-class problem. He continued by highlighting Nvidia's Hopper architecture's ongoing strength and predicting that the company's new AI-focused Blackwell chip will be ramping hard in the 4th quarter of fiscal 2025, which concludes in January. Investors most frequently inquire about Nvidia's valuation. They have good reason to be concerned, as the stock is currently trading at 70 times earnings. The problem is this. Consensus forecasts from analysts point to an EPS of $4.06 for Nvidia's fiscal 2026, which starts in January. This indicates that the stock is only trading at 37 times anticipated earnings at the moment. Even if it's more than the market as a whole, it's a tiny price to pay for a market leader with a stellar execution history and robust secular tailwinds. Because of this, even after achieving 200% gains this year, Nvidia stock is still a good investment. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Within tech, obviously, you have to think about some of the companies differently. I think with Elon involved going forward, things like crypto or AI are going to get a lot more focus. So names like Nvidia and less regulation, which will help things like Google potentially not getting broken up, obviously should benefit Tesla as they get treated more fairly relative to the unionized big 3 Detroit automakers. And so I think those are names that you think about and say, that could be a lot more interesting going forward than it was.
For chip manufacturer Nvidia, the demand for artificial intelligence infrastructure has been a huge boon. Over the past 5 quarters, its revenue and earnings have grown at a triple-digit rate. And since January 2023, its share price has soared by 910%. The 3rd quarter's financial results will be released by Nvidia on Wednesday, November 20, following market close. Investors are faced with a challenging decision. Is it wise to purchase shares now? The stock has been incredibly volatile in the wake of recent earnings events. Wall Street is overwhelmingly bullish, for the record. Ahead of the company's 3rd quarter results report, 92% of the 65% of analysts who monitor Nvidia recommend buying the stock, while the remaining 8% recommend holding it. Not a single analyst suggests selling Nvidia right now. Accelerated computing is Nvidia's area of expertise. Graphics processing units, GPUs, which are the industry standard for accelerating computationally demanding data center applications like artificial intelligence, AI, are the company's most well-known product. But because it offers vertically integrated compute solutions that cover hardware, software, and services, Nvidia is very powerful. To put it another way, Nvidia has developed CUBA, a robust ecosystem of software development tools. With the help of the platform's 600 pre-trained models and more than 300 code libraries, programmers may create GPU-accelerated apps for a variety of use cases, including scientific simulation and robotics. The business also manufactures high-speed networking technology and central processing units, CPUs, for nearby data centers. Nvidia combines those products into DGX Cloud, an integrated AI service that enables companies to supply the supercomputing infrastructure and software development tools required to create and administer AI applications online. Significantly, although GPUs continue to be the main source of income, the software and services industries will generate $2 billion in sales this year, and the networking division has already achieved an annual revenue run rate of $14 billion. CEO Jensen Huang claims that Nvidia is able to create systems with a higher total cost of ownership because of its vertically integrated approach to accelerated computing. Put another way, when direct and indirect expenses are taken into consideration, Nvidia GPUs are not only the fastest AI chips available, but they are also the least expensive. This gives the business a long-lasting competitive advantage. In the second quarter of fiscal 2025, which concluded in July 2024, Nvidia exceeded forecasts. Non-GAAP, non-generally accepted accounting principles. Earnings climbed 152% to $0.68 per diluted share, while revenue climbed 122% to $30 billion. The company posted double-digit growth on both the top and bottom lines for the sixth consecutive quarter. The third quarter will probably see the end of that trend. Although Wall Street has raised the bar a bit, management's outlook suggests that revenue and non-GAAP earnings will rise by 80%. Analysts predict that Nvidia's non-GAAP earnings will rise 85% to $0.74 per diluted share, while its revenue will rise 81% to $32.9 billion. Crucially, there is no assurance that the stock would rise in response to the news, even if Nvidia surpasses those numbers on November 20. Think about the previous experience. Nvidia's shares fell almost 8% after the news, despite the company beating second quarter projections and providing better guidance than Wall Street had expected. Investors now expect Nvidia to surpass projections rather than be content with a slight earnings beat. Over the past 3 quarters, this mindset has caused a great deal of post-earnings volatility, causing Nvidia's stock price to fluctuate by an average of 10.7 percentage points following the company's results announcement. This time around, shareholders could expect comparable volatility. According to a recent article by Susquehanna analyst Christopher Rowland, Nvidia has emerged as the de facto global AI enabler. And for the foreseeable future, the business is probably going to continue to hold its top spot. Without a strong ecosystem of software development tools, a rival will still have a hard time overtaking Nvidia, even if they create a faster AI hardware. There, Nvidia has a big advantage. For almost 20 years, it has consistently updated its QDA platform with new capabilities. Looking ahead, Wall Street projects that until fiscal 2026, which concludes in January 2026, Nvidia's adjusted earnings will increase by 50% yearly. The present valuation of 66.5 times adjusted earnings appears appropriate based on that consensus projection. Since Nvidia is involved in so many facets of the AI economy, I believe that its stock is a must-own. Like the majority of Wall Street analysts, I also believe that patient investors ought to think about acquiring a small position right now. Investors should think about increasing their holdings by a little amount if the stock declines after the company releases its earnings. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on crucial updates that could impact your investment decisions.